postal services, I'm sure everyone in this room is familiar with the idea that post is an exempt service. When you buy a stamp, you don't pay VAT. Unfortunately, some of the people who compete with the Royal Mail decided that that was anti-competitive and took a case to the European Court. And as a result of that judgment, the Revenue's decided that that exemption can only apply to universal services. So from the 1st of January next year, if you negotiate separately on postal prices or you're buying an unregulated service, then VAT will be applicable. Now, again, it probably won't affect most people who buy stamps and use universal service, but the types of service that will become subject to VAT are things like parcel force. And if you're running mail order businesses or you're distributing large volumes of post and would be in the position of actually negotiating specific pricing contracts, then you will expect to see VAT from January next year. Now, perhaps the most interesting thing about the change on postal services is that, in effect, the European judgment is saying that the exemption in the UK was always too wide. You know, these services are going to become taxable should, under EU law, always have been subject to VAT. Now, a lot of people have actually been putting in VAT refund claims as a result of that. Well, the logic of this case is that I paid an amount to the post office. They never charged me VAT, but their service was taxable, and within the amount I paid was an amount of VAT, which, if it was separated out, I could have reclaimed. And we're talking about very large sums of money. I have to say, the idea that the government, in its current financial state, will be paying VAT back to people who never paid it in the first place, and without them having the benefit of any VAT invoice to support it, perhaps seemed a bit unlikely. But in relation to a whole range of different areas where people have recently been making refund claims, the Revenue's position is that they're considering their position, which isn't exactly bowling anyone over with its confidence. So maybe there is something in it. Moving on. VAT. I mean, if you're doing VAT returns and you're running your business, you'll be aware that, you know, for most people, you claim back the VAT that you spend. Certain exceptions to that. If you've got exempt activities or you've got non-business activities, you may have to apply a restriction. Now, the current rule is that if you've got a mixture of business and non-business activities, you've got two choices. You can either say, right, I'm spending 100, 50% of the use will be for my business, I'll claim back VAT on 50. Or you can say, right, I'll claim back VAT on everything, and then I'll account for VAT on the non-business element as I go along. So effectively, as a cash flow benefit, I get all my VAT back, and then I pay it back over a period of time. From 1st of January next year, as a result of European law changes, that will be either eliminated or reduced to such a level that it's hardly available to anyone. But alongside that, there will be anti-avoidance rules that say that if you've already had the VAT back on the purchase, you have to keep paying the VAT that you would have paid as the non-business use goes along. Partial exemption, if I don't know how many people in this room will affect, but essentially, if your business has a mixture of what you would call taxable, VATable sales and exempt sales, then you're partly exempt. And what that means is that you have to look at your cost base and you have to work out under some formula how much of your VAT costs relate to your taxable activities. And that's what you can claim, except when the VAT related to your exempt activities is so small as to be what's known as de minimis. So if your exempt activities generate costs of less than £7,500 a year and £625 a month on average, then you can forget about the restriction and just claim back the VAT. So for a small, partly exempt business, this simplification is worth about $7,500 or up to $7,500 a year. Except, and the key here is simplification. It's meant to be a simplification, but of course you have to do the calculation to work out whether you meet the conditions. And if you've done the calculation, then you could just block the VAT. And the European legislation actually allows this relief as a simplification. So as a result, they are actually bringing in some simplified calculations, which come into effect from April. And essentially, if you're not spending a great deal of money and less than 50% of your turnover is exempt, you will be able to treat yourself as de minimis. The other key point is to avoid the work of doing this calculation on every VAT return you prepare. If you were able to claim back all your VAT in the previous year, you can just carry on claiming VAT in the current year and then just do a calculation at the end of the year to assess your entitlement. So the simplification will be that you don't have to do the calculation every quarter. Moving quickly on, because I am conscious we're sort of against the wire here. There are some changes. Place of supply for gas and electricity supplied through pipelines. Anyone interested? No. That's emission trading. Anyone trading in emissions? No, I suspected not. I suspect if there's anyone here involved with charities, there is something which there are no stated rules, but the government has said it's going to look at something called a cost-sharing exemption. There are quite a lot of charities and not-for-profit bodies who would work together to procure certain goods and services if it wasn't VAT efficient. If they set up a central purchasing hub, for example, they generate VAT costs for themselves because they put its staff into that, which doesn't bear VAT when they pay salaries, etc. But when charges come out, they get subject to VAT. So the government has said it's going to sit down with charities and other not-for-profit bodies and see about devising some arrangements to eliminate VAT, which may be exciting if you're in that sector.